there, everybody. Welcome to the preview of our newest training event, the Max ETF Scalping course. This is Craig here along with Eusebio, and we're really glad to have you in the room today. Chris is working on another Max project at the moment, but I suspect he may join us a little later. Eusebio has been working long and hard to develop a scalping method for Maxers, including many months of live testing, seeking to ensure that we have an effective and a reliable method available to us. Some of you are very new to this idea. Others have been waiting and hoping for a long time, and I think a couple of you may have been praying for this too. And finally, the day has arrived. So without further ado, we'll ask Eusebio to pull back the curtain and tell us about Max scalping. And by the way, we also have a special guest with us today. Eusebio will introduce him a little bit later. So we extend our very sincere thanks to you, Eusebio, for all of your efforts in preparing this for us. And it's a pleasure to present this very good audience to you today. The mic is yours.
Thank you very much, Craig, for this nice introduction. Hello, everyone. I'm very happy to see you present today in this presentation. And I also warmly thank you all the participants who will watch this presentation through the recorded video. So before starting, let's make a usual audio and video check. Do you see my screen and do you hear me well? If you would like to type a yes in the question area, or for the Max members in the Max chat room. Oh, a lot of yes already. Fast answer, so thank you very much. By the way, if you have any questions, feel free to post them in the question area of GoToWebinar, and at the end of this presentation, so Craig and myself, and perhaps if Chris is present later, and the special guest, so we will have the pleasure to answer all the questions. No question will be left. So whenever we present a new subject within the Max, I like to use a famous quote written more than 300 years ago by a German philosopher, Goethe. Many of you know that name, at least the name. And the quote is, it is an English translation, of course, it is not enough to have knowledge, one must also apply it. It is not enough to have wishes, one must also accomplish. And in fact, for many of you, this quote seems very similar, very actual, in fact. And in reality, there is a modern version of this quote, of this concept, which is called the law of attraction. If you have studied the law of attraction, it is exactly what this quote explains. Indeed, if you want to progress in your life, you need to acquire the corresponding knowledge, but acquiring the knowledge is not enough. You have to apply that knowledge. And you can make any dreams you want to progress in your life. You will have to act, to make steps toward that objective, to achieve that objective. It is not enough to make a prayer to the universe and wait for the universe to answer your dream. You have to act and so to be responsible, in fact, to achieve your dreams. And this is the concept we always use within the Max. Whenever it is necessary to achieve some result or some objective, we act in order to improve the process we are using in our trading activity. So, what will be the content of today's presentation? So, I will define very quickly what is the concept behind a scalping trading system, and I will especially focus on the main assumptions or the beliefs behind such an approach. There are several types of trading scalping approach, and I will explain which are these different styles. And so I will also explain what are the problems linked with the scalping styles. And then I will explain another way we can apply, which will be the way I will present to you today. And so I will present the aims or the objectives of the Max ETF Scalping course and then its organization. So the course will be organized into 2 sessions. and I will explain the content of each sessions, and then I will show you what you can expect with such a scalping technique, with some statistical results, real statistical results defined with real trades during almost 1 year, and I will show some past and present example of these trades. So, and then I will present the calendar and of course the price of this course. And at the end of the presentation, so we will have a short Q&A session. So let's start with the content of this presentation. So what is a scalping trading system? Generally, it is understood that a scalping system corresponds to a trading style which focuses on small price movements in order to have an exposure in the market as short as possible. This is the idea of many scalpers. They try to be in the market just a small time period and to catch a small profit, so for each trade. This requires, of course, to increase the number of winners to make some decent profit and decrease the size of the wins. So generally speaking, an approach in scalping consists in increasing the number of trades, hoping to increase the number of winning trades, but with a price which consists in decreasing the reward to risk ratio of each profitable trade. And this will create some problems. So, because the main assumptions or beliefs, because we can prove nothing, of course, when I say assumption or belief, behind such kind of trading approach are the following. Less time exposure limits the risk. It is believed that if we stay in the market as short as possible, we limit the risk we have for each trade, because we never know what may happen. It's impossible to define exactly what may happen on the next second, on the next minute, on the next hour. We may have a black swan at any moment. And so by limiting the time exposure, we limit the risk for the trade we are exposed or we are taking. It is also believed that smaller movements are easier to catch than larger movements or trends. So I have a personal opinion about that, but it is not the point here. The point is to present what are the assumptions and the beliefs. And another belief is the smaller movements are way more frequent than larger movements. And this is true. When we observe a chart, whatever the time frame, we can see that small movements are way more frequent than larger movements. But of course, with these assumptions, it is not a guarantee that we can be profitable. Because to be profitable with a scalping system, this requires a lot of other important conditions. So, but before explaining these conditions and the risk associated, I have to define also the different type of scalping. Perhaps many traders don't know, but there are indeed at least 3 classical scalping styles. And most of you know 2 of them. But the first one is what I call a market maker-like style. And this scalping style consists in trying to capitalize on the spread of the instrument we want to trade by using simultaneous orders on the ask and on the bid price. But this is an extremely difficult approach to trade, because we are competing. If we try to use that kind of style, we are competing with the market makers. And it's not possible in every market. It's, for example, possible in the stock market. In the forex market, it's way more difficult because the spreads are highly variable and sometimes they are extremely tiny. And we have some difficulties in the trade execution with a lot of latency, with volatility, with slippages sometimes. So this kind of approach for scalping in the forex is almost impossible. It's possible in some markets, but it requires some very strict conditions. Then a very classical, well-known scalping style is consists in taking a tiny profit but with a big trade size, But this kind of style requires, of course, to trade instruments which are enough liquid. Whatever the market we want to trade, because a scalping technique can be applied in any market, in the stock market, in the futures market, in the bonds market, in the currency market, and so on. And then there is another traditional scalping technique, scalping style, I should say style instead of technique, which consists in taking a trade whenever a classical setup appears, whatever the setup is. For example, it can be a very classical cross of two moving averages, and then to close the trade on a first exit setup, or when some profit, for example, 1R or a 1-to-1 reward to risk ratio is achieved. And so these are, in fact, the three possible classical scalping styles, with one which is extremely difficult to use, and two which are more feasible but which have also some important constraints. This is what I'm going to explain now. So what are the problems we encounter when we try to apply these scalping styles? Because we need to act very, very quickly when we scalp the market, we need to master what is called the art of efficient order execution. In fact, any delay, any latency in the trade execution, or any delay due to the trader, or any error made by the trader can wipe out a potential profit should the trade be handled correctly. Because the price can reverse very quickly, and if the trader is not fast enough to open and or to close the trade, the potential profit may disappear very quickly. And so this requires, for example, a fast execution system like a direct access system, a DAT, and possibly a level 2 quotes. So these two approaches, these two techniques or tools may help. So, and for example, in the fact, we begin to see brokers proposing a level 2 screen in order to help the trader to handle their trade, their entry and their exit levels. A very important point we have to take into account when we scalp the market is not only the frequency of the trade, but also the cost associated with the trade, because these costs can greatly impact the profitability of the trading system. And what are the costs? We have two types of costs. For example, the slippages we may face, but also the spread and and the commissions. Never forget the commission, because some brokers have also a system of commissions. This depends on their business model. So some broker may have very tiny spread, but as a counterparty, they will have commissions, and vice versa. And some broker will have spread and a commission. So the frequency of the trade, the spread, the commissions, the slippages will have a big impact in the profitability. And so sometimes all these costs may completely wipe out the profit you can make with a scalping system. And so in such a case, the choice of the broker is essential. So it is not only essential to have a good broker, but also a broker proposing an approach through a special technology, for example, with low spread and low latency and low commissions. And then the trading itself, the trading approach, in fact. The trader, in order to be successful with any scalping style, must first of all perfectly identify the direction of the movement he wants to trade, for example, the trend and its momentum, or, because this is possible with a scalping approach, a trend reversal. And in order to achieve profitability, so it is essential to correctly identify the direction he wants to trade, but also the momentum of that direction. And so this means that a complete mastering of technical analysis is required. You need to know a lot of techniques of technical analysis in order to achieve success in scalping. In the 80s, I remember there has been a lot of studies which has been made around technical analysis, because technical analysis was highly favored by many traders, even professional traders at that moment. And many conclusions, many studies have shown that in order to be profitable with only technical analysis, winning rate of 70% or more was necessary. And this has not changed today. And it is even worse with scalping technique. So the winning rate must be very, very high. For some specific reason I will explain just in a moment. So the volume of activity is also important. When a trader wants to trade a specific instrument, this instrument must be very liquid in order to have fast entries and fast exit. Because of course, if we miss an entry, it's not a problem, we have missed an opportunity, but once we have made an entry, once we are in a trade, we must be guaranteed that the exit can be made very, very quickly. And so the high liquidity is a necessity when scalping. And so because the scalping technique requires some very specific techniques, a high discipline, a strict discipline is also necessary. It is even more important than in a trend following system. In a trend following system, if you miss the entry at the beginning of the trend and you take the next entry setup, it's not a big problem. But and then you will have your exit setup. If you miss one exit setup, it may not be catastrophic. But in scalping, if you miss a small detail, this can become a losing trade. And a losing trade, if you accumulate losing trade after losing trade, it can become a catastrophic situation. And so what some traders are doing artificially is, in order to increase the winning rate, they use a larger stop loss, and sometimes insane stop loss, in a mechanical way. And this is the big problem, in fact, with scalping trading system. So the losses of the losing trades are way more important than the profits of the winning trade. I have seen scalping system with a 90 or even 95% winning rate and miserably failing because the 5% or the 10% of the losing trade were producing big losses. It's not a problem to have, in fact, a larger stop loss and a small profit for each winning trade, and so a larger loss for losing trade, provided the total profit are still larger than the total losses. And this requires some very specific attention in trading. And so this is why, with all these problems, and this list is not exhaustive, of course, we can imagine other conditions, other situations. As a consequence, it's not a surprise that many scalping trading are failing. And fortunately, there is another way to scalp. And this way to scalp is to take into consideration in the trading process, to take some conditions or some knowledge on how the market is really working. We know that 80% of the Forex, for example, but this is true also for all the other financial markets, are driven, manipulated by the big boys or by the institutions, in fact. And so that alternative way to consider scalping consists in knowing when, and I'm waiting for the max scalping EA for $79. Oh, John, you have a strange dream. So that other way, that alternative way to consider scalping, so consists in, first of all, knowing when and in which direction the big boys are possibly managing their position, whether or not they manipulate the market. It's also important to know when some volumes become critical, because not all the volumes in the market are made equal. There are some levels of the volume which are a big indication that something will happen soon. And when you know that, it helps in scalping. It is also very important to identify critical price levels where liquidities are available, where, for example, the market can reverse. And so when you know these specific price levels, you have an edge in the market and you can consider a trade exploiting that knowledge. And also, but you already know that by any other trading system, and especially for the max members with the max trading, the different max trading approaches, it is also important to know when to trade, but also when not to trade. Just to take an example, it is not necessary to trade when we are facing an important news release. If we are not able to predict what the news release could be or may be, taking a trade before a news release, it's insane. It's better to wait for the news and then react to the news. And so when we use, and the list I have mentioned is not necessarily exhaustive again, but when we use correctly these informations, then the scalper trader will naturally, and this is important, naturally achieve a very high success rate without the necessity to use insane stop loss. Just to give you an example, with the scalping system I'm presenting today, the winning rate is around 95%. The losing rate is around 2.5%. The profits for each trade is between 3 and 5 pips. Remember, a scalping approach consists in taking a tiny profit whenever it is possible. So between 3 and 5 pips generally. Sometimes it may be more, sometimes it may be a little less, but on average between 3 and 5 pips. And the stop loss may be between 15 to 20 pips. Sometimes it may be less, sometimes it may be larger, depending on the volatility of the instrument we want to trade. And if you make a quick calculation, even if you take the less favorable numbers, if you make a quick calculation of the expectancy, you will see that the expectancy is positive and very positive. And so with such results, you can consider that this way of scalping the market is highly profitable. And I will give some more detailed results later in this presentation. So, and so what is or what are the aim of the max ETF scalping course? First of all is to have a simple trading method, because the rules are not difficult at all. We have some rules in this course, in this scalping approach on MT4, but there is also a version which will be presented perhaps later on NinjaTrader, exploiting safe movement, so movement we understand, using critical price levels, using specific levels of volumes, using technical bias, a technical bias. I will show what a technical bias is in a moment, as an option, using a global context bias. I explain here that the global context bias is an option because it is a service we are providing for several weeks now, several months. And when we take that global context into account, the winning rate of this scalping approach further increase almost to 100%. That's really amazing how the understanding of a global context bias helps to increase further naturally the winning rate of any trading system. And I will illustrate with some examples in a moment. And so at this point, we can say that a trader now has the choice between two approaches in scalping. Either a quantitative approach, where the trader prefer the quantity to the quality, but accepting the problems and the difficulties such a quantitative approach present, so with all the uncertainties and all the problems linked to too large losses compared to the small profits, or this new approach, which I will qualify as a qualitative approach with less trade, but with safer trades, but with also some constraint, because applying these elements, safe movement, critical price level, specific volumes, technical bias, possibly the global context bias, and with, of course, as always within the sound risk and money management, so requires some constraints. And it's not as simple as it may seem usually in a scalping trading approach. So my personal choice would be for this second approach. Of course, I always prefer the quality to the quantity. So how are the sessions organized with this new approach in scalping? So the course is organized with 2 sessions. And during these 2 sessions, I will present the concept, the rules in a very progressive way with a lot of illustrations on chart, of course. And as usual in all the Max courses, there will be homework assigned at the end of each session. Now, what is the content of the first session? In the first session, I will explain the different criteria individually. And these criteria consist in the following: how to recognize, first of all, the current context of a pair. There is a simple way, indeed, to identify the context of a pair and in which direction we have most of the time to consider taking a trade on that specific pair. How to recognize some level of retail traders' activity, because this is also important. So the big boys will begin to appear sometimes in terms of, for example, stop loss hunting, when the retail traders' activity will achieve some level. And so it is important also to recognize when the big boys may possibly manipulate the market and may possibly manipulate the pair we intend to trade. It is also important to understand which pair we can scalp. Not all the pairs are favorable for a scalping approach. There are specific pairs we must use, we must consider. Then I will also teach how to recognize the critical price levels with high level of liquidity, or possibly with high level of liquidity. We are never sure 100% of the case because we don't have all the informations in the market. I will teach also how to recognize when the volumes sustain the move, and it will not be what many traders already know about the volumes. It is important to recognize also, and I will teach that also, how to recognize extreme price areas. Where are the levels, where are areas in the price where the big boys begin to act, in fact, begin to accumulate or begin to distribute. I will explain how to use the max ETF slow bias as a criteria whenever it will apply for this scalping approach. And I will explain also how we can optionally use the max bias advantage, so the bias related to the global context, in order to further increase the winning rate of this scalping technique. So this is the content of the first session, and then in the session number 2, we will define the trade setups. So we'll define the entry and the exit setups. And the max ETF scalping will in fact consider 4 types of setup called setup levels. These setups are not setups as we usually understand with the max courses, which represent several types of price pattern, but each setup will correspond to a set of conditions. All the criteria I have explained previously represent a condition, and depending on which conditions are fulfilled simultaneously, we will have a different level for the setup. And so the level 1 will correspond to a minimum set of fulfilled conditions. This means the riskier type of trade, and for this level of trade, of setup, we will consider, for example, a small position. For a small position size, a small trade size. The level 2 will correspond to a larger set of conditions being fulfilled. And this will make that trade, that setup, safer. And so for this trade, this kind of trade, we will consider, for example, a smaller or medium position size. And then with the level 3, we will have a larger subset of conditions being fulfilled. We will consider a larger position size. And the level 4 will consider to a situation when all the conditions will be fulfilled. And this is the safest and perfect setup, which has almost a 100% or if not a 100% winning rate. But because all the conditions must be fulfilled, we can first of all consider a very large position. But these kind of setup, and you can understand that, I think, are less frequent. So the more frequent setups, the most frequent setup are the most risky setup, the less frequent setup are the safest setup. But when I say the level 1 represent a riskier setup, this still represents a very high winning rate, so more than 80% winning rate or 85 or 90% winning rate. So each level defines which criteria must be fulfilled, and so which trade size to use. And so in the session 2, I will also especially explain which pair we can use to scalp that way, and what kind of brokers we have to consider. Not all the brokers can be used in order to scalp the market. We need to have brokers proposing very fast execution and small commission and very, very, very small spread. So the cost of trading must be minimal. And of course, at the end of the session 1 and the end of the session 2, there will be a homework assignment. So now, with the context, the content of these 2 sessions, so I can explain what you can expect with the max ETF scalping. Because of course, many of you could ask the question, yes, but what kind of result may I expect with this kind of trading system? So the statistics I'm going to present here correspond to real statistics made with real trades on a period of 8.5 months. And the period runs from April 11th last year, so 2019, to yesterday, or last Friday, so January 24th, 2020, with no trade or almost no trade in December. For the reason you know, December is a low-level activity month. And so this represents, so if we accept December, 8.5 months of trading. During that period, so we have made 546 trades, which still represent a nice number of trades. This represents approximately 60 trades per month, or on average 3 trades per day, on 8 pairs. I will explain in the course what are the 8 pairs. So this means that sometimes we will have less trade. There will be days with no trades, but there will be days with many trades, up to 10 trades, for example. I think the maximum has been 10 trades. But there is a possibility for one specific day with a very high level of activity to see more than 10 trades. But on average, 3 trades up to now. 546 trades represent a very, very significant number of trades. And among these 546 trades, we got 505 winning trades. This represents 92.5% winning trades. Only 11 losing trades. This represents 2% of losing trade, and 30 break-even trade, because we have also 30 break-even trade. This represents 5.5% break-even trades. Now, when we consider a losing trade, we always use, of course, an emergency stop loss for each trade, but it's extremely rare that the price hits that emergency stop loss. Most of the time, the loss of a losing trade is way smaller than the maximum loss, and the maximum loss is around 5 times a possible win, in fact. So the ratio win-loss is still very, very favorable with such winning rate. If we exclude the break-even trade, because in the statistics, many traders have a tendency to exclude the break-even trade. Personally, I like to include that, but many traders like to exclude the break-even trades. And so if we exclude these 30 break-even trade, we are left with, in fact, 560 trades, 16. Among these 516 trades, there was still, of course, 505 winning trades and 11 losing trades, but the percentages are different now. We have 97.9% of winning trades and only 2.1% losing trades. So this represents in both cases a very high winning rate and a very low losing trade. And this is important because when we consider catching a very small profit in the market, we need to have necessarily a high winning rate in the process in order to achieve a nice expectancy for that scalping approach. And so these were live trade. Let me give you just some examples of these trades, just to illustrate some of them. By the way, in terms of financial performance, depending on the risk you will associate to your trade, you can count to make a profit of around 5% per month using a very tiny risk per trade, up to 10 to 15% per month if you use a larger risk, for example, a 1 or 2% risk, but this will be explained in the course too. So you can modulate, in fact, your financial performance depending on the risk you can associate to each trade. So let me just show you some past and recent example. So Barbara is asking what time of the day. I will explain that, Barbara, at the end of the day, but all these trades have been taken during the European session and some of them during the second part of the US session. But theoretically, this scalping approach can be used at any moment of the day. At any moment of the day, even during the ASEAN session, in fact, provided we trade specific pairs, the pairs I will indicate during the course, okay? Which are pairs with, in fact, the condition is to have very, very high liquid pairs. So some past example. So here, this is an example of a pair. The pair is not important in itself. You see how the price is evolving. You see some indicators on the chart. For example, you see these blue up arrow. These blue up arrow indicate when possibly the big boys will begin to accumulate or distribute if we have down red arrow. We have also here this magenta line or purple line, which is a specific price level. And so we have here a special indicator based on some aspect of the volume with some trend line we will have to draw on this indicator. There are other indicators I have not shown here on, which are not shown here on this chart. And this is an example of a trade. So the entry has been made right on this point to the upside. So it was a long trade and the price went immediately so in the direction of the trade, and the trade has been closed with a profit with the intended profit. So another example was this one, again, a long trade. The price was going downward, but nonetheless, in this down movement, the big boys were beginning to accumulate to the upside, and some of the conditions were fulfilled to take right at this point here, right here, a long trade, and immediately after that, the price moved the number of pips, the necessary number of pips to take the profit we intended to take. Some other past examples are the following, and this one, this time I will show you some spreadsheet which are not included in the PowerPoint here. So this was a level 1 trade on the Aussie US dollar. So the level 1 trade corresponds to the smallest set of conditions being fulfilled. So here the price was going upward, but the big boys were beginning to distribute, and all the conditions were fulfilled to take a short trade. And the short trade has been taken on this point, where you see this white line, and immediately after the price moved to the downside and made the objective. So immediately, in just a few, in less than 5 minutes, the time frame was a 5-minute time frame. So in less than 5 minutes, the price made the objective. So another example is this one. This one is an example of a level 2 trade with more conditions being fulfilled. It was a long trade in this case. And so here the entry has been made here, and you can see that immediately the price went upward, making the expected profit. So this was on the Euro US dollar with a level 2 trade. An example of a level 3 trade was this one on the US dollar, no, the US dollar Swiss, for example. Here, the big boys were beginning to accumulate, and so almost all the conditions were fulfilled. Not all, because it was a level 3 trade. the entry has been made here and at this point, and so immediately the price went upward and the profit has been made very, very quickly. It took only 2 bars in the 5-minute time frame to achieve the profit. Now, the example I have shown here in the past examples are simple trades. Sometimes, and this will be taught also in the course, sometimes there will be a possibility to make some scaling. In fact, what may happen sometimes is an entry will be made and the price, instead of going in the direction of the trade, the price will go in the opposite direction of the trade. And with specific conditions, it will be possible to scale in while the price is going counter movement, in fact, in order to average down the entry level of the trade, of the, we call that a campaign, and then almost always at some point the price reverses and make the profit we expect, or we are able to close the trade at break even. And from time to time we will have a loss, of course. So these were examples of past trade made last year. I'm going to show you the 3 trades which has been made this week, last week, in fact, not this week, but last week. So these were recent examples, 3 examples. The first example was on January 17, so on the Kiwi US dollar, on the 5-minute time frame. We can see here some of the conditions. So we see, for example, when the big boys begin to accumulate, we see a specific price level, a critical price level. We see here another volume indicator. And we see here, you recognize the slow bias. We don't use the fast bias, we use the slow bias. And so we had many conditions which were fulfilled. And so we had 2 trades, in fact, in this on this chart. 1 trade here with an entry. You can see here the entry almost right at the bottom of this movement. It was a pullback, in fact, an entry at the bottom of the pullback, with an immediate exit, so a few pips later, and a few bars later, another entry possibility, and again, a profit made within a few bars. So 2 trades, so on this pair that day. Another example, on the 21st of January, so also last week, so on the pound US dollar, this time it was a short trade. With these red arrows, we begin to see that the big boys begin to distribute. Some of the conditions were fulfilled to have a specific level subset condition being fulfilled, allowing a short trade, and a few bars later the profit has been achieved. So the trade again closed profitably. In fact, all the trades last week have been closed profitably, all the trades. So, and the last example was on the US dollar card, Friday, precisely Friday. The big boys were beginning to accumulate. Several conditions were fulfilled, allowing an entry almost at the bottom of this small low, and then the price take a little more time to move in the right direction, but it moved finally after a few bars, enough to close the trade with the expected profit. So accumulate means getting ready to go long, and distribute means going short. Yes, Robert, that's perfectly correct. Yes, indeed. And I will explain that concept. I will explain that concept during the course. Okay? So level 1 and level 2, level 3, level 4 represent which set of conditions are fulfilled, and they represent also the level of safety of the trade. As I have explained previously, if I come back just a few slides earlier, so here, so we define 4 levels of setups. The level 1 represent the riskier setup. The level 4 represent the safest setup, but all the setups have a high winning rate, of course. But we go from the riskier setup to the safest setup, depending on the number of conditions being fulfilled. The conditions being all the conditions I have described here, except the max bias advantage, which take into account the global context. Okay? And so now, before concluding, so here, this presentation, I would like to introduce, yes, it worked also with currency futures, Miguel, indeed. There will be a version later, most probably with the currency futures on NinjaTrader, for example. Okay? And so, before concluding this presentation, so I would like to introduce my good friend Gregory. Gregory is a French trader. It is also a friend. He is also a friend of mine, a long-time friend. We know each other for many years now, and we are working on trading for many years, almost every day. And so we exchange ideas, we exchange approaches, we exchange, we sometimes exchange contradiction between us. It's a really productive process, and Gregory has been extremely important in defining this max ETF scalping approach. He has made a lot of suggestions, he has made all the backtesting, and most importantly, he has made all the live trades. And so with all the discipline which is required to handle these trades. And so I would like to introduce you Gregory and let Gregory tell you a few words. Gregory, if you want, take the mic, please.
Yes, hello, Eusebio. Hello, everyone. I'm very glad to be here.
Yeah.
Thank you for this presentation. It's very good.
Oh, it's always a pleasure, as you know. And so I'm really grateful to Gregory to be present today because he has had an important role in establishing this trading scalping, because personally, scalping the market is not my preferred trading style. I don't like scalping the market. It does not correspond to my temperament. I like to trend the trades, as you know, but Gregory, on the contrary, has the right mindset to scalp the market. And so he has had a very big contribution here to establish this ETF scalping approach. And by the way, Gregory is also the guy who has coded one of our important tools in the Max, which is the dashboard. Let me show you the dashboard. So here, just to illustrate the kind of work we can use within the Max. And I will explain in a moment how I use this dashboard in my different trading approaches. This is the dashboard, this screen here. We can define, in fact, a list of pairs here. I don't know why we don't have here the numbers, a list of pairs, a list of time frames, and we can define also some alerts. I'm going to activate these alerts. So here. True. Okay, that way. And so this dashboard indicates for each pair and for each time frame the situation of our ETF line. Let me show you an example of the ETF line. I will take that example later. Let's take, for example, the Aussie US dollar. The ETF lines are these two yellow and orange lines. So these lines are not used in the scalping approach. The scalping approach uses here the slow bias. But the dashboard helps me to define, in fact, the timing to check my global context conditions. And so the dashboard is based on these two ETF lines, which are very sophisticated moving averages, and the white down and up arrow represent the cross of these two lines. And so we can consider these lines in several time frames, and this is what the dashboard is doing. In fact, here, the dashboard indicates in which direction the two ETF lines are going, and the number behind each arrow in each of the time frame indicate the number of bars the two lines have crossed. For example, we have alert. Let me show you the alert. For example, now we have on the Kiwi US dollar and on the pound Kiwi, the two ETF lines having crossed to the downside. So we can define that. And so I use this kind of dashboard to define the timing for me to check my global context bias, and I update my bias whenever it is necessary. So this dashboard is an essential tool for me. And so what are the global bias? Let me show you the global bias. No, it's just a technical tool, John, but after each alert, whether it is an alert on the 5-minute time frame, the 15, the 1 hour, the 4 hour, the weekly, I need to check all the context. You know that the global context is made of the geopolitical, is made of the central bank decision, is made of the news release, and some other conditions. And so I often check and recheck all these conditions along my trading session. And we distribute the global bias in the following way. I have made a screenshot of today. We use a Google Sheet, in fact, which is shared among all the participants, and we use also Slack to be notified in real time when a change is made in the bias. If I take, for example, the indices today, the stock market has been hammered by the coronavirus problem, and so we have seen a decrease, a drop in all these indices all along the day. And so whenever there is a change in the bias, so I indicate that change in this Google Sheet in real time. The change is time-stamped. The time are given in terms of the New York time. For example, since the London Open, I was short on the DAX and the FTSE 100. And around 1 hour after the London Open, I was short on the S&P 500 index, the Dow Jones index, and the Nasdaq index. And I was almost long on the pound pairs, for example. And so let me show you just on 3 examples. And by the way, when we use these information in terms of global context directional bias, the winning rate of the scalping approach approaches 100%. So let me just illustrate with 3 examples. So here, let's take the DAX. And so the DAX, this is the DAX for the entire day. This red vertical line indicate it was 20 minutes after the London Open. So indicate my directional bias. A red vertical line indicate a red down bias. And the second vertical line represent when I have stopped my trading session. And we can see that the bias was perfectly in the right direction, and with the max or with the scalping system, not with the DAX, of course, but on a pair which can be traded with the scalping approach. So any short setup could have been taken. So this was an example of on the DAX. An example on a pair, the pound Aussie. My bias on the pound Aussie was long since a few minutes after the London Open. The bias was already upward before the London Open, and we can see that we would have been able to make a nice long trade, and after that just another small long trade here at the end of the European session. And the last example I will show you is on a major, the Aussie US dollar. The Aussie US dollar, my bias was to the downside before the London Open, which corresponds to this vertical red line. A few minutes later, the bias was already to the downside and has continued to the downside, in fact, along the entire day. This was the end of my session, and we can see again, nice short trade we could have taken along that downside. So the bias today were almost perfect. And when we explore these bias, any kind of trade, either a max trade or a max ETF standard trade or a max ETF scalping trade, could have been positive. And by the way, today, with the scalping approach, with an update, an evolution of the scalping approach we'll explain later, there has been 2 trades today, 2 profitable trades, in agreement with the bias, the context, global context bias, by the way. And so for that, again, thanks to Gregory for his contribution to this scalping approach. We get another alert, for example, on the crude oil. So we have to check, for example, on the crude oil, if it is interesting to go down on the crude oil. It's not because we have an alert that we have to change the bias. We have to check several conditions to define the bias. So this is, I'm going to stop the alert here, otherwise we'll have a lot of ding, which will make us crazy. Or I can stop my trading platform here, it's not a problem. And so, just to conclude, because of course this scalping approach will not be for free. Or there is a problem with the sound. Can you still hear me? You still hear me correctly? Oh, okay, John can hear. Okay, fine. So the max ETF scalping course, the normal price is fixed at $1,799, but we have a special discount price for this webinar presentation, and so with an important discount, and so the price for the webinar special today is $40.99, and the two sessions are already defined. They will start in February, so just in a few days now. The first session will be on the 3rd of February and the second session on the 10th of February. So there will be 1 week between the two sessions. And for those who would like to ask, would like to consider, so payment plans are available. And so now, Chris, Craig, Gregory, and myself, we are ready to answer any of your questions, if you have questions, so we are here to help. So any questions about what I have presented today? And I see that I am right under the 1 hour presentation, as I have promised at the beginning of this presentation. So any questions we can answer? The payment plans are, if I'm right, but Craig will confirm, a 3-month plan and possibly a 6-month plan. How many indicators do we need on the screen? So let's take back, so here, this chart, for example. We need to have these special price levels. There will be an indicator here I have not, I'm not showing. So which is an indicator, a special indicator. It is not an indicator, in fact, it is a script which takes outside information and display that information on the screen. It is a very, very important information. We need that volume indicator, and we need the slow bias. And that's all. That's all the information we need. And we need, if you want to do that, you can use also the global max bias, the max bias advantage. We will make a general presentation of this approach, the max bias advantage service next Thursday at 3 p.m. also. I will explain a little more on detail in which what is the context, what is the content of these bias and how they are established and how they can be used. So we have 1, 2, 3, 4, 5 indicators at most. Okay? Do you execute trade using the MTM? You can execute the trade manually, but you can use also the MTM, because with the scalping approach, you just make an entry and then an exit. So you can make an entry, a buy or a sell, a buy in this case, and then an XXX. Sometimes it will be necessary to make a scaling, but as you know, with the MTM, you can make a scaling. So yes, you can use the MTM. Ralph, what do you mean by firms criteria list of? So list of firm, list of criteria. I don't understand your question. If you want to repeat your question. The preferred broker, the recommended broker. This will be explained in the course, during the course. Okay? But the criteria will be, of course, safe brokers, serious brokers, but brokers proposing fast executions. So this means essentially STP brokers, low spread, tiny spread, and tiny or low commissions. But we will give you 1 or 2 examples of broker you can use. Yeah, you can use USA and ASEAN trading session, indeed. Now, of course, if you sit in front of your screen during, for example, the ASEAN session, it's possible that for the entire day you will have no entry setup, you will have no trade. Okay? As I have said, on average, The 546 trades which have been made have been made essentially during the European session, sometimes also during the second half of the US session, but there are days with no trades. So on average, 3 trades per day. So sometimes no trades, sometimes just 1 trade, sometimes 4, 5, 6 trades. It depends on the level of activity in the market. So is Top Step Trader FX good enough broker? I don't recommend Top Step Trader, Miguel, to try to be funded because the conditions are extremely severe and you need to be able to achieve some minimum objective which will be extremely difficult to achieve with this scalping approach if you use a small risk. If you use a larger risk, you can achieve the objective fixed by Top Step Trader, but there is a risk also to have a larger drawdown because these firms like Top Step Trader, like FTMO, like OneUp, and so on, requires a very, very, very small drawdown. Typically between 3 and 5% drawdown. And this is not really adequate for this kind of trading. You know that with the max myself, I can accept a drawdown of 15%. But this is the kind of drawdown you cannot use with firm funding traders. So it's delicate. It's delicate. So are the max courses required in order to trade this method? Are any US broker acceptable? I think this is just Wanda and Forex.com. Tom, no, there is no other max courses which are required to be able to learn and to trade this method. Everything will be explained in the course, so there is no other need. If you want to complete your arsenal of trading approaches with trend trading, you can, of course, follow one of our max ETF primer or standard course, but it is not an obligation. Now, concerning Oanda and Forex, we have to check if they are appropriate, because I think their spread may be too large. So, will these indicators be made available for Ninja 8? Yes, Theo, but later in a separate way, because the approach with Ninja Trader, because with Ninja Trader we are able to trade in the futures market, we have to adapt some of the conditions. So there are some variations. The example were with low volatility pair. Why not GBP and ZD and GBP? Dan, this is a good question. So GBP, the pound Kiwi and the pound yen are volatile pairs, indeed. But one of the reasons of this volatility is these pairs are less liquid than a pair like the US dollar yen, for example. And as I have said, scalping the market for the reason I have explained requires high liquid pairs. Because one idea in scalping the market is when you will accumulate profit, your account will progressively grow. You will be able to increase progressively your trade size. And you can achieve big size in scalping trading. But at that point, you will need to have big volume in the market and fast execution, which will not be the case with these more, I don't like to call them exotic pairs, but cross pairs. And some of the informations I have not shown here on this chart, which is displayed in this upper left corner of the chart, requires to have enough level of activity to have safe entries and safe exit, which is not the case with these pairs like the pound Kiwi or the pound yen, which are appropriate, however, for trend trading, but they are not appropriate for scalping trading the way we use the market informations. Let's see, can the method be traded in a simulator or has to be real-time data for the indicator? Pete, unfortunately, we cannot test with a simulator or the strategy tester because there are indeed two indicators, the indicator which is not shown here, plus this volume indicator, these two indicators do not work with the strategy tester or the simulator, unfortunately. Will this be suitable for US trader with finding brokers? We will recommend, in fact, two brokers, but we have to check if these two brokers will accept US traders. I think that one of them accept US traders, so, but we have to confirm that. SyncForex. No, SyncForex, Ralph, will not work because we need to have the indicator have been coded for MetaTrader and for NinjaTrader. Now, what you can do, in fact, is you can make your analysis on MetaTrader and trade on another platform, provided the conditions on the speed of the execution, so fast execution and low commission, low spread, are fulfilled. So if SyncForex fulfills these conditions, there is no problem to execute your trade on SyncForex. Okay? Okay, Darian, have a good evening. So, how much live trade experience is recommended for this? You don't need, once you understand the conditions and the rule, you don't need a lot of experience. So you will need some days, some weeks, perhaps some months of practicing, but then after that you'll be able to trade by yourself. However, to be honest, there is one point which may be somewhat difficult for each trader, is to define the context. So what is the influence of the geopoliticals, of the news release, of the central bank in the direction of the pairs? If you are not able to make that analysis enough correctly, you will have some difficulties. And this is why we provide that service of the max bias advantage. I will explain more in details next, I think it's Thursday. Let me check. It will be next Thursday, yes. And you should receive, so you will, normally you have already received an email explaining the day and the time of this presentation. So, does this method work well in the indices as well as crude oil? For crude oil, this approach works only for the 8 pairs we will recommend, but a future update we will have, so a future evolution we are working on, works on many more pairs, many more instruments, and with also even a further higher level of activity. So you will have more opportunities indeed, Theo. How to sign up for the course, not knowing if there will be a US broker that it would work. We have to confirm. We will take the information and we will inform you, Dan. There is no problem. Some other questions I see here. Can you give some rough comparison of the return range for each of the max strategy, scalping, primer, etc.? It's not a so easy question to answer, Tom, because it depends really on your own level trading activity. If we take an intraday trader trading full time with the max primer can achieve around 10% per month as a profit, which is approximately the same level of performance we can achieve with this scalping approach using a medium risk per trade. With the max standard, however, the profit will be way higher, 20%, 30%, sometimes more per month, depending on the ability of the trader to apply correctly the scalping technique. Sorry, not the scalping technique, the scaling technique. Okay? Because scaling in along a trend importantly increases the profitability of each trade. But this requires, of course, to trade pairs which are trending. And this is why on our website, sorry, every week we update the list of the pair which moves the most. But many of these pairs are not the most liquid, allowing scalping. And so scalping and primer have similar financial results, but this depends on your own trading activity, and this depends mainly on the risk you take per trade. We recommend always to take a small risk. For example, when we trade with the primer or the standard level or the SAM level, we recommend to never exceed a 2% risk per trade. And so we will have similar recommendation with the scalping approach. So, will future update be included, or will there be additional? This is something we will have to consider, because it depends on the importance of the updates. Do you still use Tradesway or PaxForex? No, PaxForex, they have too large spreads, so it's not an appropriate. Tradersway, I don't know. In case I don't know all the traders, all the brokers, okay? So, let's see. So I may not be able to attend one or both live sessions, so I would have to study off the recordings how long do I have to complete the homework. Usually we ask the student to complete the homework within 1 week. But of course, due to the specific nature of this scalping approach, 1 week may not be appropriate. So we are always available to grade the homework, even if the homework are sent 2 weeks, 3 weeks after the session. We are always available. You know, we have students, for example, having subscribed to one of our Max Primer course last September, and who are sending their homeworks only nowadays. So we are always available to help. So don't mind for that. Of course, as soon as you have completed the course, it's better to make the homework, because as soon as you practice, faster you'll be able to trade live. If you take more time, you waste your time. You lose time, and so you lose opportunities. But we are always available to help. Can you give us details on the, will be able to automate it? I can say that 90% of the approach can be automated, but not the 10 remaining percent. There are two aspects which cannot be automated: the global context, so the context, in fact, or some aspect of the context, especially the global context, and sometimes the way to consider this volume indicator. So, can you give us example on the details on the indicator? This will be given during the course, Miguel. Tarek, it is hard to connect trading with the global concept because many well-known economists interpret different global events differently. Therefore, most of traders relate on technical analysis only. How this scalping method will be technically successful? Oh, Tarek, you are making, in fact, a wrong assumption. Understanding the context is not taking into account the opinion of the economist. If you base your understanding of what the economists are telling, you will not understand the context. Because if you take a panel of, let's say, 100 economists, chances are that you will have 50 of them with an opinion and the 50 other with an opinion in the other direction. You have to make your own opinion based not on opinion of others, but based on facts, on objective, factual information. So, Canadian firms, I cannot answer that question for the moment, Ralph. We have worked with two brokers. We'll give you these two brokers, and then, but we can ask these two brokers if they accept US and Canadian customer, because we know that there are some rules, some regulations. So, but we can take the information. So,
Hi,
yes, Chris, please.
Peter's been asking about. Let me see. We had an email come in a couple of weeks ago. I'm sorry, I can't remember. Asking if we could do strategy tester demonstration of this working. And as Eusebio says, it won't work on the simulator or the strategy tester because it requires live feeds coming in at the time that it's all happening. So, sorry, can't do that. Pete's also suggested that maybe we do a recording of it through a day. It's a lot of work, Pete, but we'll have to see how it goes. We don't know if it's going to work out for that particular day or not when we start it.
Yeah, indeed, we can consider two approaches for that. We can consider indeed recording an entire trading session, a live trading session, and condense the recording, so cutting portion of the recording when there is no activity. And second possibility is from time to time we can make a live session. So, these are two possibilities we can consider indeed.
Okay, I have a question myself, maybe for Gregory. How much advance notice do you get of a setup coming? Like, do you have to watch the chart constantly through the day, or can you be doing other work, which I know you do? I hope he's understanding. So how much notice do you get of a setup coming?
Yes, hello, Chris. If I can answer. I'm trade along the day. Yes, I'm on my screen all the day.
Yeah,
from 9 a.m. to 18 a.m.
Yeah,
sure.
18 p.m. Sorry.
Yeah, 9 a.m. corresponds to the London Open, and 9 p.m. corresponds to the middle of the second part of the US session.
Yes.
Yeah. But indeed, it is important to, ideally, we have to watch the chart the entire trading session, but some of these indicators will have alert, and when an alert appears, then you can check your chart. For example, if I'm right, but you can confirm that, Gregory, but I'm sure the indicator we display here in the upper left corner of the screen has an alert when the conditions are fulfilled. This means that we have at that moment to check all the other conditions to have a trade. It may be immediately, it may be sometimes later. And I think that these arrows, blue and red arrow, also have a sound alert. And by the way, because this has been a question, none of our indicators repaint, so no indicator repaint. This slow bias, sometimes you may have the impression it repaint, but it doesn't repaint. What is happening is the following. This slow bias represents what is happening in a higher time frame. And so as long as the higher time frame does not confirm a change in the direction, the color of the indicator can change. So it can change from green to red, and before the higher time frame changes from upward to downward, the color red can come back to green. That is not repenting. This is what is happening in a higher time frame. When we trade in the smaller time frame, a higher time frame indicator always have an adaptation as long as the corresponding higher time frame candle does not close. But no indicator we are using here repaints. We never use repainting indicators. So within the max, whatever the max system we are using. The recommended pairs are included in the course, indeed. I joined the webinar late. Do the arrow appears on the chart and do they run? So they appear on the chart, but they do not repaint. As I have said, Adam, no indicator we are using repaint. Okay, I hope I have answered all the questions. We have answered all the questions. If we have missed some question, feel free to repost it because the feed in the question area goes very fast sometimes. And I'm checking. No, I think we have answered all the questions, and also in our Max chat room, I think we have answered all the questions. So no further questions. I see just a new question. So I would like to purchase the course, probably with the which I did not find at the payment plan link. Will that become? Yeah, indeed, the payment plan will come indeed. Or perhaps you can contact. Craig has posted in the Max chat room the link for the discount and the discount plan. Craig, if you want also to post them in the chat area of GoToWebinar, so it will be done. So also, if it is turn out that there are no suitable brokers who accept US customer, can I get a refund? All the prices are definitive, Tom, because at some time you will always find a broker allowing you to trade with this approach. But what I would like to advise you is, if you want to be sure that there is a broker which allows US or Canadian customers, wait for the confirmation information. So we will take the information very soon. You will be informed, and so you will make your decision after that. Okay? If you have any questions, so whatever the subject, so the content of the course, the calendar of the course, the payment plan, so feel free to contact us. So here we have our website address, we have our email address, and we have also a Skype ID. So you can always contact us for any further questions or for any details agreement. So. Tom, for that question you have, Craig has answered, yeah. Craig has answered. Okay. I think we have answered all the questions. So I thank you very much for your participation, for your active participation, for your questions, for your attention. So I wish you a great rest of the day, a great evening, a great night, depending where you are all over the world. We have so Thursday the presentation of the Max Bias Advantage service. I will go more into the details on how to use these bias in your trades. And so I hope to see you there. So you are all warmly invited to participate. I think that Craig has also an announcement to make before we wrap up this session. And of course, I wish you a nice trade and see you in the course.